Hi, I'm Dan Westfall. My company is Client Focused Financial. Today, what I'm going to talk to you about is money sitting in savings accounts. So, a lot of the people that I work with out there are generally the goal that they have is geared towards retirement. But there's also another aspect that people need to think about when they're investing and saving money, and that's what I refer to as the middle bucket investment. So, what a middle bucket investment is, which I have a video out there specifically talking all about the middle bucket investment on my website under the Insights tab. You can check that out. But a middle bucket investment is really just money that you want to have available between now and retirement. If you're 40 years old, it may be that you plan on buying a new car in 5 years, or you plan on purchasing a big vacation coming up, or you want to have a vacation home in 10 years prior to retirement possibly. Whatever the goal may be, it's just pre-retirement. I'm always a little bit surprised with how much money people have sitting in their savings account at the bank versus being invested though. So the reason I'm surprised with this is because, as you probably know, if you have money sitting in your savings account, the bank pretty much pays you nothing on that money. So even if you were to have that money sitting in a CD at the bank for a year right now, rates right now on a CD at the bank, roughly about 2.5%. If you don't need that money that's sitting in your savings account for, I'll say, at least 12 months, year time frame, where you're planning on not using it maybe for 3 or 5 years, there's almost always a better place to invest your money than putting it or leaving it in the savings account where you're not making anything on it. Because you have to keep in mind that inflation over time averages about 3%. Currently, we're sitting at about 2% inflation right now, which just means that every year stuff gets more expensive on average by about 3%. Currently, if you're not making at least 2% on your money, you're actually losing value because of inflation. Banks, credit unions, and even insurance companies can act as the middleman for your money. Really what I mean by that is they're taking your money in your savings accounts, for instance, where they're giving you pretty much nothing on the interest for that money while they're using that to then lend out to their customers via mortgages, car loans, personal loans, where they're charging on average for personal loans 6.5%, mortgages rates are at least 4.5%, car loans in that range or above as well. They're making a lot of money on your money. The graph that I have up right now is just depicting really what I want you to be doing with your money, which is bypassing the middleman and investing it in the global economy yourself. Or working with an advisor that puts together a portfolio so they can help you invest in that. So that way you're making more money on your money versus just getting what the banks or the credit unions or insurance companies are going to give you. So a question you may be thinking right now is, what do you do with your money that's sitting in savings at the bank when you don't want to risk losing that money over the long term? Great question. Answer really to that is talk to an advisor or do the research yourself to put together a portfolio where, what an advisor would do, like myself, would be put together a portfolio geared around your time frame that you plan on using the money, your risk tolerance, tax brackets, all the different variables that you have in your personal situation that would really affect what your ultimate goal is. Because money has a goal. Even if you don't plan on using it for anything specific right now, but you just want it to grow over the next 5 years, that's still a goal. So it's sitting in your savings account isn't helping you reach that goal of growing your money. If you don't feel comfortable putting together the portfolio yourself, reach out to me. Be more than happy to have a conversation with you to talk to you more specifically about what your goals are, time frames, all the different variables that play into effect as far as putting together an investment strategy for you, and then implementing that and ongoing, updating you and monitoring on what's going on within your portfolio to help you reach your goals as far as making money on your savings that's sitting there. Takeaway I want you to get from this though is, don't leave your money sitting in savings. There's always a better place that you could put that where you're going to make more on that money over time versus just leaving it sit in savings and giving a free loan really to the bank or credit union or insurance company, whoever the money's sitting with. If you have specific questions for me, feel free to DM me on here or reach out to me on my website. Yeah, there's the phone number on my website as well. If you'd like to have a phone conversation with me, I'd be more than happy to talk to you specifically about your situation and how we could help you improve on what you're doing with your current investments. For more videos like this, click the link above. That's the link to my website. On there, you can go under the Insights tab. That's where I post all these videos, as well as Facebook, LinkedIn, if depending on where you're checking this out at. If you like this video and you think other people would like this video, click the share button below. Don't be selfish.